ஃபாரின்ல இருந்தா வரேங்கிறாங்க.
எது சார்?
ஃபாரின்ல இருந்துலாம் அட்டன் பண்றேங்கிறாரு. நம்ம
ஓ
இவரு
நைஸ், வெரி நைஸ்.
இவர் இருக்கார் இல்லையா, ஒன் ஆஃப் மை ஃப்ரெண்ட் இஸ் அப்ராட்,
ஓகே.
சிங்கப்பூர். ஸோ அவரு நம்ம பாஸ்ட் பிரசிடென்ட் இவர்.
கரெக்ட் தான். உங்களுக்கு உங்களோட இன்டராக்ட் பண்ணினவங்களுக்கு they will know the value of the session. So yeah, they would want to attend.
யூரோப்ல இருக்காரு.
ஓகே ஓகே.
ரமேஷ், பாஸ்ட் பிரசிடென்ட் ஹெச்டிஎஃப்சி.
ரமேஷ் நடராஜனுங்களா சார்?
ரமேஷ் ரமேஷ்னு ஹெச்டிஎஃப்சியில் இங்கே ஹெட்டாக இருந்தார்.
ஓகே.
இஸ் பாஸ்ட் பிரசிடென்ட் ஆஃப் ஐமா. ஐமை நம்ம இதில் சிஎம்ஏ.
ஓ சிஎம்ஏ பாஸ்ட் பிரசிடென்ட். ஓகே.
அவர் யூரோப்பில் இருக்காராம்மா. நேற்றுக்கு மெசேஜ் போட இந்த
ஓகே.
மீட்டிங் இதை பார்த்துட்டு ஐ அட்டன் அப்படின்னு போட்டிருந்தாரு.
ரைட் ரைட் ரைட்.
All இந்த வருஷம் ஆஃப்டர் a long time we got some awards. எல்எம்ஏ பெஸ்ட் பெஸ்ட் சாப்டர் அவார்டு கிடைச்சிருக்கு. பெஸ்ட் எல்எம்ஏ அவார்டு.
கரெக்ட் கரெக்ட்.
My brother-in-law has joined. Shiva, welcome.
Good evening, sir. Ramji sir. Good evening, Meena ma'am.
Good evening,
Hello.
Puri sir.
Good evening.
Hello.
Puneet here, sir. Good evening. I have some problem with my video. I think there's a
Oh,
slight bandwidth issue, so I'm not switching on my video.
okay.
Maybe it will get better over next half an hour or something.
Good evening, Puneet sir.
Good evening. Good evening.
IAA member Alia, madam.
பரத் நம்ம ஆல்ரெடி மெம்பர் தான் சார்.
You are, yeah, we had one meeting, illa? Tasi, joint meeting.
கமிட்டி மீட்டிங்களா?
இல்ல இதுதான் நம்ம டாசி அண்ட் ஐஏஏ ஜாயிண்ட் மீட்டிங் வச்சிருந்தோம்ல, ஏஐ அண்ட் பட்ஜெட் ரவியோட.
ரைட் ரைட். நான் ஏதோ மிஸ் பண்ணிட்டேன்னு நினைக்கிறேன் சார்.
முத்துக்குமார்
Okay.
அவர் தானே பிரசிடென்ட். இப்போ
Okay,
லாஸ்ட்
okay.
இயர்ல இருந்து அவர் தான் பிரசிடென்ட். ஆமா,
ரைட்
அவங்க பிசிக்கல் மீட்டிங் அரேஞ்ச் பண்ணணும்னு சொல்லிட்டு இருந்தாங்க.
சரி சரி.
நல்ல crowd.
ஆன்லைன்ல நடந்ததுங்களா இல்ல
It was
பிசிக்கலா?
physical. We had met at Auditors Association Hall.
ஓகே ஓகே
Full crowd அன்னைக்கு.
ஓகே.
மந்த்லி ஒரு மீட்டிங் வச்சுக்கலாம் அப்படின்ட்டு.
சரி சரி சார். ஐ டோன்ட் நோ, நான் ஏதாவது மிஸ் பண்ணிருப்பேன்னு நினைக்கிறேன் கம்யூனிகேஷன்.
காலேஜ் எல்லாம் லீவா? இல்ல மஸ்ட் பி ஒர்க்கிங் இல்ல?
இன்னைக்கு எல்லாம் ஒர்க்கிங் தான் சார். இன்னைக்கு யாரும்
College reopen ஆயிடுச்சு sir. It's working.
ஒர்க்கிங்கா?
இல்ல இன்னைக்கு ஃபெஸ்டிவலுக்காக
இல்ல sir, today it's working. Ma'am, can we start?
We can start now. Okay.
Ah, we can start, ma'am. Time is 6:30. Yeah, ma'am, you can give the welcome.
So good evening, everyone.
Good evening.
Great
Good evening.
pleasure to welcome you all for yet another edition of Monday Musings. On behalf of CMA, I am extending a very warm welcome to each of you who are joining here. Today we have gathered today for an understanding of Budget 2024, which is the financial blueprint for the year. No matter whatever be the budget, whichever the government comes, there is something for everyone. It affects in a small or a large way. So, we are very fortunate to have with us today CA Ramji sir, who is kind enough to share his immense knowledge. He has a very vast experience, and he started his practice as a chartered accountant since 1985. He has also passed ICWI Inter, ACS, and Information Systems Auditor from the Institute of Chartered Accountants of India. He has held various positions at the branch and the regional level. He's also a certified international trainer for Excel, qualified in certificate for IFRS exam in ICAI, was awarded the Ravi Puraskar Award to the best trainer in India by the Junior Chamber International, has passed the Independent Directors Examination in 2020. He has been the past chairman of Institute of Chartered Accountants of India, Coimbatore branch in 1994, past president of Auditors Association of Southern India. He has co-authored a book on the guidance manual for VAT audit, was an independent director with KPR Mills Limited, was the treasurer in the Coimbatore Management Association, has been elected as the vice president for the newly formed Internal Audit Club of Coimbatore, and has served as a member of the governing council of Indian Chamber of Commerce and Industry. A person with such a vast experience, we are very fortunate to have Ramji sir with us to share a lot of insights, and we look forward to hearing from you, sir.
Okay, thank you, ma'am.
Thank you. இது ஷேர் பண்ணோம் இல்லையா? I have to share the presentation.
Yes, sir.
எங்கேருந்து how do I
சார் ஹோஸ்ட் கொடுத்துட்டீங்களா?
கொடுத்துட்டேன் மேம், co-host பண்ணிட்டேன்.
அந்த presentation is in my desktop. இதுல ஒன்றும் வரமாட்டேங்குது.
You just click on it, sir.
ஷேர்னு போட்டா
One minute. The
Share
chat is
the
fit.
screen and option வரும்
Yeah,
sir.
good afternoon.
yeah,
Yeah, stop.
Yeah, it has come, sir.
Your desktop is visible.
ஒரு நிமிஷம். இது இல்ல.
So you can
Right.
press
Make
F5.
it full screen, sir. At the
We can-
bottom, there'll be a full screen.
இல்ல இல்ல, this is not the file I want to open.
Yeah, the right side, sir. Right side. Yeah, the next column. The next one. Not that one, sir. The right side
இல்ல
of
இல்ல, I'm
yours.
trying to bring it down.
The right side near the exit. Yeah, that's it.
Okay,
Yeah.
clear-ஆ இருக்கா?
Clear.
Clear, sir. Yes.
Okay, good. Yeah, good evening to all the participants here. And it's today being a Raksha Bandhan as well as being Avni Autumn for all of us. Happy Raksha Bandhan to you. gives me a great pleasure to present before you my views on the budget of 2024. So before we get into the budget as a, I thought I will present you the basics of global, the macroeconomic trends as well as the basics of global economic trends. If you look at the World Economic Outlook, which was released in July 24, the India being an emerging economy, you find that India is in a good position to emerge as a developing economy. All the parameters which are there, we have been able to achieve. The growth projections of the emerging, as far as the IMF is concerned, they have been talking of 4.3% for 2025. We have actually, our growth projection is a little better. I will come back to that a little. So before we start the discussion on economy, on the budget, I thought let me give you some highlights of the economic survey, which was released by the government on 22/7/2024. The survey, I'm just giving you a snapshot of what the survey is talking about. It says we are a resilient Indian economy. So economy grew at 7.2% during 2024, based on 2011-12 base year. Net taxes grew by 19% due to strong tax growth. Current account deficit for last year is 0.7% of GDP. Foreign exchange reserve is 11 months of imports and about 98% of external debt. This is a base on which our exposure to foreign, say both imports and exports are being measured. Compare this to maybe 1991 when it was down to a week's reserve. External debt to GDP is at 18.7%. Core inflation has fallen, lowest at 5.4% since COVID. During COVID time, we were at around 8% or so, 8 or 9%, compared to other developed countries which are a little more, like US was around 12%. Stable banking sector, primary capital market at 10.9 lakh crores or 29% of gross fixed capital formation in both private and government sector enables a strong, stable banking sector. Food inflation, of course, has been high compared to 6.6% of GDP last year to 7.5%. Main reason has been the inclement of weather, depleted reservoir and crop damage. Short-term outlook, however, is positive. Inflation reduced from 4.5% in the previous fiscal to 4.91% in the next fiscal. Again, this is based on normal monsoon and no policy shocks. Job and skills creation should be the priority in short term. That's what economic survey says, and the government's budget has also given that as an emphasis. To look at the foreign exchange, we have been, as I said, we are covered by 11 months import cover compared to other countries. If you look at UK also, it is only 3 months, Canada 2 months. Korea is around 8, Brazil 17, China is 16. US is only 3 months cover. So India is in a much better position compared to all the developed economies. India is closest to its inflation target. If you look at the target of around 4%, we are around 5.4. Let us now look at the budget, which was presented by Finance Minister. This was her 7th budget. I think the most budget presentation by any finance minister. Maybe Morarji Desai comes second. The budgeted fiscal deficit is estimated at 4.9% of GDP for 24-25, compared to estimates of 5.1. Before we get into that, let me explain what this deficit is and how is it made of. You look at the budget process as such, the Modi this year, after the election, usually the budgets are presented around 1st of February of each month, each year. This year, we had a vote on account, and therefore, after the elections, the formal first budget, the budget has been presented on 24th July of 2024. Now, what is a budget? So, for those students who are here, budget is a forecast of government expenses and revenue for the next year. The first budget was presented in 1947 by our Coimbatore industrialist, Dr. R.K. Shanmugam Chetty. And if you look at the constitutional provisions regarding the budget, Article 112 of the Constitution of India talks about annual financial statements. The word budget is not there, is not used there. Annual financial statements to be presented in the parliament. And if you look at the budget is made up of revenue and capital budget. Revenue receipts, you talk about the tax and non-tax revenue. Capital and revenue expenditure, you talk about expenditures incurred for day-to-day working. If you look at the capital budget, you talk about changes in assets and liabilities. You will have capital receipts and capital expenditures. Now, when you talk of capital receipts, these creates liability. It is made up of reduction of assets. Maybe, like disinvestment, all these becomes a capital asset, capital receipt. Increasing of liability, whereas capital expenditure is creation of an asset, reduction of liability, or building roads, building infrastructure, building railways. All these are coming as part of capital expenditure. Budget document generally is presented in two parts. Part A talks about the macroeconomic portion, where the new schemes, the allocation to different sectors, all these are discussed. The part B talks about the finance bill, and if you look at the Article 112, it talks about annual financial statements. 113 talks about the demand for various sector grants, and the 112 is the financial policy statement. 110 is the finance bill. So these are the powers which are given through the Constitution of India. Till 2016, we had two types of budget documents. One was a financial budget, another was the railway budget. And based on a committee headed by Vivek Roy and Ashok Desai, they decided to club both the railway budget and finance budget. And from 2017, only one budget is presented in the parliament for both railway as well as for general finance. If you look at the steps in budget process, the first step will be the presentation of budget in the Lok Sabha. Before that, the finance minister goes and meets the president and requests her to give her consent to make this presentation at the Lok Sabha. Then there is a discussion in the Lok Sabha as well as the Rajya Sabha on the budget provisions. Then standing committees they go through the grants which are given to various sectors. There is a voting which takes place on the budget, and then finally the appropriation of the finance bill is passed. Now, in this time, the budget has been presented and passed in the parliament on 7th of August. And I think President assent is also there because the Gazette has been released of the Finance Act on 16th of August. So that Gazette notification has come, which means all the provisions which were tabled in the bill have now been passed. Of course, with about 48 amendments. There have been some amendments which have been made from the budget which was presented in the parliament to what has been passed in the this time we have the budget is a document which presents 100 years roadmap, Viksit Bharat 2047 roadmap. So the cabinet has approved the roadmap on the day of budget. President had also given her consent, and the roadmap of Viksit Bharat 2047 has been prepared. Basically, it stresses on 4 themes actually. There are 4 themes of the budget. This year's budget has got 4 themes. First theme is on employment, second is skilling, third is MSME, and fourth is middle class oriented. And the focus is on 4 major castes. Now they have used this term caste, where they talk about women, youth, then poor and farmer. So it's supposed to be oriented towards these four major parts of the community of our society. Now there were about 9 priorities based on in line with the roadmap of Viksit Bharat 2014. Government has announced 9 priorities in the budget. Is my screen clear? Hello?
Yes, sir. It is clear, sir.
Yes, sir. It was clear. Now again, you've made it.
Small. Sorry.
Yeah, now it's okay. Again, you
Now it's
need to
clear,
go.
sir. Yeah.
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 Yeah. So these 9 areas are productivity and resilience in agriculture, employment and skilling, inclusive human resource development and social justice, manufacturing and service, urban development, energy security, infrastructure, innovation, research and development, next generation reforms. If you look at what has been done in respect of each of these 9 priority areas, the finance minister has talked about R&D in agriculture and creating about 109 varieties of high yielding crops. I think Prime Minister had released a few days back some of these varieties which are going to benefit about 1 crore farmers. They have to be trained also in the latest thing. As far as inclusive HR policy, employment and skilling, lot of aspects have been done. I can show you some of these. Employment and social security, there's a direct transfer of 1 month's wage up to 15,000. Salary cap of 1 lakh per annum. Reimburse employers of EPFO contribution up to 3,000 for 2 years. Internship opportunities in top 500 companies for 1 crore youth in 5 years. So these are some of the actions taken for skilling. Then inclusive human resource development and social justice. The budget talks about Vikas Virasat. So there is a Purvodaya scheme which has been launched, where 3 lakh crore has been set apart for women and children. And in terms of northeastern sector, 100 post-payment banks have been promised. Then credit guarantee scheme for MSMEs have been announced. I will talk about that MSME sector separately. If you look at the urban development, so the manufacturing and service is also coming there, where I have discussed. If you look at the urban development, states have been asked to reduce the stamp duty for properties purchased by women. 100 weekly hubs, street food hubs in select cities have been proposed. Transit-oriented development. So they are planning for a lot of metros and all that. They are all coming as part of the urban development. Water management, because water is a very essential thing today. So scientific water management is also being planned. Then Pradhan Mantri Awas Yojana Urban 2.0. This is for housing schemes. Then from energy point of view, private power production as well as nuclear energy, lot of emphasis is being given for developing, for doing R&D in these 2 areas. Bharat small nuclear reactors are going to be set up. Pumped storage has been, they're planning to improve. Then solar energies, schemes regarding solar energy audits, all these are going to be coming under energy security. For infrastructure, about 11.11 lakh crore has been provided for developing infrastructure like roads, bridges and all that, representing 3.4% of GDP, which includes flood mitigation, irrigation, tourism. So Anusandhan National Research Fund, which is meant for innovation, has also been launched. If you look at the next generation reforms, the budget talks about rural and urban land related reforms, where unique land parcel identification number is being planned. Bhu Aadhar is planned to be introduced. NPS Vatsalya scheme, wherein parents and guardians can provide for minor children. That has also been introduced. So with this, the 9 priorities area has been addressed. You look at the from where the money comes and how it is going to be spent. The projected expenditure for the next year is about 48.2 lakh crores compared to, and out of which for the for revenue expenditure about 37.1 lakh crores is meant towards funding the salaries, pensions and all that. About 11.11 lakh crores is meant for capex. If you look at the sectoral allocation, defense has been allocated about 6.2 lakh crores. Roads have been allocated around 2.7 lakh crores. Railways 2.55. In fact, railways, they are planning to introduce the latest accident, avoidance thing, gadgets. They are planning to do that, so that the crashes which have happened last year may not happen again. For agriculture, they are planning to give about 1.32 lakh crores. Education 1.2 lakh crores, and for health about 0.9 lakh crores. Interest payment.
Nitin joining, sir.
Welcome, sir.
Thank you, sir. Thank you so much. Sorry for being late.
Yeah. For interest payment, about 24% of total expenditure has been, the allocation is about 24% of the total expenditure. If you look at the receipt, the component of receipt, a total amount of 32.07 lakh crores is being projected income, which is about 15% more than the last year. Out of which 31.29 lakh crores comes from the revenue, the taxes and IT, GST, corporation tax, etc. And about 78,000 crores on capital receipt. Out of the total gross tax revenue, about 38.48 lakh crores, 10.2 lakh crores will come from corporation tax, 11.87 lakh crores from income tax, 10.6 lakh crores from GST, and then customs and other also will be there. So if you look at the gap between the projected expenses of 48.2 lakh crores and the projected revenue of about 32.07 lakh crores, there is a net fiscal deficit of about 16.13 lakh crores. Now this deficit, how it's going to be funded? It's going to be funded through borrowings, external or internal. So this is now governed by the FRBM, Fiscal Responsibility Act. So from the financial prudence is actually being laid great emphasis. So as per the FRBM, there is a proposal to progressively reduce the fiscal deficit year on year. So last year it was about 5.6% of GDP. This year it has been projected at 4.9% of the GDP. For 2021, it was around 9.2% of GDP. So which means there has been a very nice improvement in the management of fiscal deficit. The target, of course, of 3%. So therefore, if you look at the year-on-year improvement in the in controlling the fiscal deficit, the target of 3% during 2028 seems to be possible. So that is the main thing. So therefore, India is looking at being one of the developed economies. Then we come to simplification, the taxation. They have, anyway, we come to that little later. MSME sector, I was talking about that, where new schemes for credit guarantee scheme for purchase of plant and machinery without third-party collateral or guarantee is being promised. It also helps in unlocking working capital by converting receivables into cash, by reducing the turnover criteria from 500 crore to 250 crore. Simplify FDI investment and ODI regulations to facilitate foreign investments and use INR as currency for overseas investments. Jan Vishwas Bill 2.0 to be introduced for ease of doing business. Creation of 12 new industrial parks in 100 cities in plug-and-play mode is also being planned. Post-COVID growth rate is sustained at 7% or more, which is a very important thing compared to other countries in the world. They are also planning to set up new state of ports in important states. Let's now come to the tax proposals. You look at the macroeconomic indicators. The budget estimate, as I said, personal taxation is around 11.87 crores against 10.7 lakh crores from the corporate sector. Setting up of Global Compatibility Center by MNCs. And as I said earlier, India is moving towards being labeled as a developed nation. These are some of the aims for simplification in tax. Review of Income Tax Act of 1961 has been planned, which will enable a clear, concise, and easy to read and efficient tax system. I think already about 2 or 3 years back, there was a committee which had prepared a direct tax code. Now, you know, these income tax acts have so many sections, and then you have so many clauses, and then you have so many provisos. Now, the new code seeks to remove all these, planning to make it more simplified. Simplification of charities and TDS litigation and appeal can be that process will be simplified, deepening tax base. So the summary of what has been presented or passed in the Parliament on 7/8/2024. This is a small summary. Simplification has been aimed. Removal of equalization levy in the hands of e-commerce operators. New Vivad Se Vishwas scheme. Earlier in 2021, this has been revived. Angel tax has been removed. Reduction of time limit for old cases to be reopened. Reduction in holding period of capital asset, and new code to be introduced. What are the pain points? If you look at the budget on many of the provisions have been made effective from the day of budget itself. This has led to an adverse reaction from the stock market. Removal of indexation from capital gains. Of course, my opinion is it is beneficial. I will discuss that little later. However, when the bill was passed, they have restored the indexation for purchases made before 23rd July. So that is an improvement over the earlier proposal. Short-term capital gains tax has increased from 15 to 20%. Increase on STT on futures and options. All these have been changed, and therefore the impact is very high when it is up, even though it looks to be a very small figure. But when you look at the rupee value, it is really high. What are the changes in the rates? If you look at the rates, there have been all these rates. The new scheme, there are two types of scheme which is now in force. One is the new scheme where you don't get any deduction under Chapter 6A, which means Section 80 deductions are not there. And the other one is the old scheme where you can enjoy all the deductions. Now, the change has come in the tax rates only for the new schemes. If you look at the slabs which have been tampered, it's only the new two slabs which have been tampered. One is the 3 lakhs to 6 lakhs. Earlier it was 5%. Now that upper limit has gone to 7 lakhs, 5%. 6 to 9 was 10%. Now it has become 7 to 10 lakhs, 10%. 9 lakhs to 12 lakhs was 15%. Now it has become 10 to 12. The rest of the slabs are the same. So therefore, the net tax benefit is around 10,000 rupees. If you include standard deduction, 17,500, you get some additional benefit. That's all. Change in 80CCD family pension scheme, they have increased from 10 to 14%. No distinction. Earlier, the government and private sector employees, where there was a differentiation, 10% in the hands of private sector, 14% in the hands of government. Now that distinction has been removed. Similarly, deduction increased in the hands of employees from 10 to 14%. For employer, he gets a deduction under 3614. Now, major change has come in the charitable trust. Earlier, we had two sections, 12AB and 1023C. Contribution to trust in education and health sector was exempt under 1023C in respect of those trusts for medical and education where government's funding is received. So the entire amount was exempt. Whereas other trusts have to be registered under 12AB. Now, for simplification, with effect from 29/30 or from 1st October, any trust which is now being registered will not come under 1023C and only under 12AB. So those trusts which have been granted 5 years registration, they will see an exit from 2029 and 30. After that, all the trusts will be under one common section, that is 12AB. Where trusts have not applied for continuance of registration in their new date, even a 1-day delay would have resulted in cancellation of registration, which means if your trustee's registration is cancelled, then there is an exit tax, which is levied on the basis of whatever properties, movable or immovable, you hold. So the exit tax of 60% was there at the maximum marginal rate. Now the powers have been given to the principal chief commissioner, where he can waive off this few days delay, provided proper reasoning is given for such delay. So in 2022, all trusts were required to do a re-registration, some under 1012AB and some under 1023C. Now it's all going to be under 12AB. The budget now allows for a merger of trust with another trust having similar objects. Where existing trust is closing down, then it becomes liable for an exit tax. Therefore, merger becomes beneficial when it is getting merged into another trust which has a same number of objects. So the impact would be this would reduce the number of trusts in existence, and also there is an exit route available. Instead of paying that 60%, you can now merge it with another similar trust. Power to condone delay is now given to the Principal Commissioner of Income Tax. Now, if you look at concessions to International Financial Services Center, IFSC, exemptions have been given for providing financial services to resident and non-residents. New category of exchange traded funds and retail funds are also eligible for tax exemptions. Benefit of exemptions from applicability of Section 68 relating to unexplained cash credit has been extended to venture capital fund regulated by IFSC authorities. Currently, this is granted to funds registered with SEBI. So there is a improvement in the provision actually. So under transfer pricing regulation, where any interest is paid in excess of 1 crore, exemption is given up to 30% of the EBITDA earlier. Now the entire amount can be claimed as a deduction. We now come to the business income. Some companies there are some entities who use the house property, give it on rent, like for Airbnb, they have an understanding with Airbnb. So they treat it out as house property, as a business, they treat it as a business asset. So there was a issue that whether this is a business income or whether it is an income from house property. They used to claim it as a business income and also claim expenses incurred for maintenance of such premises as a business expenditure. Now, with effect from this amendment, it is clarified that income from letting out of residential or parts thereof, residential property or parts thereof, should be taxed as house property income and not as business income. As per Section 22, where any residential premises used for business purposes, they cannot claim it under income from house property. So the alternative can be to offer under other sources. Then we come to a very important provision which is applicable for all partnership firms. So partnership firms are governed under Section 40B(5) of the Income Tax Act, where the salary to the partners are being paid as per the earnings made by the firm. So before the amendment, the salary which was permitted to be deducted from the income of the firm was first 3 lakhs, rupees 1,50,000 or 90% of the book profit, whichever is more, balance 60% of the book profit. After the amendment, they have increased the 3 lakhs to 6 lakhs, and it has become, instead of 1,50,000, 3 lakhs or 90% of the book profit, balance of 60% of book profit. Now, one important provision has been introduced, which is so far we never had a distinction between partners and the firm. The partners the firm was represented by the partners. Now they have brought in a distinction whereby they have said that any salary which has been paid to the partner will be taxed under section 194T if it is more than 20,000 per year at 10%. Now the issue was whether it is applicable from 1/4/24 or whether it is applicable from 1/4/25. Now it is very clear. It is applicable from 1/4/25. So our assessment year 26/27. So which means that if you, in case you have, you are supposed to have a partnership deed which actually represents the, which clearly creates, specifies what is the salary, how it is being given, how the administration is being done, and all that. Now because of this, because it is applicable 1/4/25, you can now plan to insert clauses which will help you to support the stand, saying that any withdrawal from the firm can be from partners' balance in the current account. So that can be an amendment which can be done in the course of the year. Salary can be, usually the book profit is determined only at the end of the year. So one planning which can be done is when you need not withdraw. In between withdrawals can be from the capital account or current account. The final, after the books are, after the books are written up and you determine the profit, then you can claim that salary which is as per the provisions of 40B5. But only problem is if you are going to write the books and ensure that it is written up before, say, May 31st, which is the last day for filing the last quarter TDS return. So at that time you can do the deduction. But then one problem is if the deed says, specifies that salary of so and so amount, say 10,000 rupees per month or 50,000 rupees per month has been specified, subject to the limits under Income Tax Act, then that becomes the gross salary. So every month, it will be presumed that this 50,000, even if you do not pay, you have to give a credit to the partner's current account. And therefore, when you give a credit to the partner's current account, you have to deduct TDS. If you do not deduct TDS, then you will be subject to 18% interest, and also penalty may follow. So there is a question which is raised is, should interest be on gross or the net after determination of the book profit? In my view and view of others, it should be on gross. So therefore, this is the amendment. Actually, representations have gone, but I think government has not thought about this. So therefore, maybe we can still try and send some representation for correcting this thing. Then we come to a very important chapter, which is the capital gains taxation. Earlier, you had 36 months for some assets like gold, jewelry, etc. For land and all, it was 24 months. And then for shares, it was around 12 months. Now that 36 months category has been removed. So all capital gains have been reduced from 36 to 24 months. Unlisted shares sale, regardless of the holding period, will be treated as a short-term gain. So when you treat something as a short-term gain, it gets added to your other income and taxed according to the appropriate rate. Okay. Tax under 111A was being paid at 15% for all listed shares. This has been increased to 20%. Sale of all listed shares held within 24 months will be taxed at 20% and treated as short-term capital gain. For assets other than shares and securities will be taxed at regular rates. In terms of long-term capital gains, the rate has been increased from 10 to 12.5% without indexation. As I told you earlier, at the time of amendment, at the time of passing of the finance bill, the government has brought in an amendment which allowed the assessees to take an option of going for indexation for properties purchased before 23/7/2024. But one problem is it is applicable only to individuals and HGF. Earlier, the assessee was not defined. So companies were also taking advantage of this scheme, companies and LLPs. Now it is very clear this provision of indexation will be applicable only to individuals and HUL. Basic exemption has also now for long-term capital gains for sale of shares or mutual funds, you had an exemption of 1 lakh. Now it has been increased to 1,25,000. Now, any purchase of assets acquired before 1/4/2001, grandfathering was given and the same continues. So before 1/4/2001, if there was an asset purchase, you can substitute the cost or the stamp duty value as on 1/4/2001 as a revised cost. And from then you can apply the indexation till the current period. The indexation is about 3.63 during the current period. For securities, the grandfathering before 1/1/2018 is available. Unlisted debentures and bonds are treated at par with market-linked debentures will be taxed always as a short-term capital gain. I'm giving you some example, my view on why it is this 12.5 is beneficial where the property prices have really appreciated. One example I am giving you here. Suppose you have purchased a property on January 1st, 2001 at 10 lakhs. The cost inflation index for 24-25 is 363%. So the cost as on 24-25 will be 36,30,000. And if the sale price is 1 crore, then your capital gains will be around 63,70,000. At 20%, the outgo will be 12,74,000. Whereas under the new scheme, the outgo is only 11,25,000. So the new scheme is beneficial where the inflation of the land or the prices of land has appreciated significantly. Another same case, if your appreciation has not gone up so much, and if it is, say, instead of 1 crore, it is only 50 lakhs, then the old scheme becomes beneficial. Then we come to uniformity and taxation of capital gains for residents and non-residents. So the non-residents, the long-term capital gains on purchase of units purchased in foreign currency, existing rate is 10%, proposed rate is 12.5. 115 AC, long-term capital gain on transfer of bonds of an Indian company, 10 to 12.5. So mostly it has been increased to 12. For FIAs or specified fund, short-term or long-term gain on units other than units purchased in foreign currency, short-term capital gain 15%, long-term capital gain exceeding 1 lakh 10%. So now new section, they have increased it to 1,25,000. Under 115E, long-term capital gain for NRI is around 12.5%, increased from 10%. Now what happens to buyback of shares by a closely held company? Suppose you have a share in a closely held company. You have inherited or you have got you have invested in a closely held company. Now you might have invested at, say, 100 rupees. And suppose the share, the buyback, through buyback, you are getting an amount of, say, 1,000 rupees for that 100 rupees share. What will be the tax implication? See, the amount which is being given to you, that 1,000 companies, in case of, so far it was exempt under 1034A in the hands of the shareholders. Companies were taxed at 20% additional tax called buyback tax. With effect from 1/10/24, so it is going to be from 1st October. If any shareholders receive any amount of buyback, it is treated as dividend in the hands of the shareholders, taxed at the maximum rates. Whether any expenses can be claimed, Section 57 has also been amended, therefore no expenses can be claimed. The amount paid by shareholders for acquiring is treated as a capital loss. So the 100 rupees which you spent on purchase of these shares is treated as a capital loss. 1,000 rupees which you are going to get on the sale of these shares will be treated as income. So this is the new development which has, and the company need not pay any tax, but it will deduct TDS 10% on the amount paid. Then currently, any transfer of capital assets under gift, will, or transmission will not be treated as a capital asset. However, this was, there was a vague definition of who will be the assessee under this. So the companies also used to take advantage. Now they have brought in through this amendment of section 47(3). It is now restricted to individuals and HUF. So any gift by a company, LLP or AOP, will be taxable. Usually companies or LLP cannot give gifts, but there was a Bombay High Court decision which allowed the company to take advantage. So that has been negated through the amendment. Then we come to a very important amendment, which is the angel tax. The angel tax was the tax which has been charged on the premium, based on the valuation for startups like, Byju's and others. They used to charge, they used to issue shares at a very high premium based on valuation. So they used to pay about 20% tax for such valuation, 20 or 30%. So far, only non-resident investors were covered under angel tax. Now, after abolition, now what they have done, they have removed this angel tax. So there is no problem. Any amount you can charge as a premium and you can still be not taxed. However, you have to be careful because the source will also be tested. So general avoidance of those GAR provisions will apply. So one has to be very careful. What is the source of source? Which means 2 levels they can go and check whether the investment is coming from legal sources or whether there is any illegality involved in the obtaining of this fund. So this is an important scheme for the startups. Then we come to the administration side, where income escaping assessment exceeding 50 lakhs was taxed on reopening of assessment, and the 10 long years were prescribed as time limit for reopening. 1 minute, what is the time? Okay, 7:16. Am I clear? Is my speed
Yeah,
okay?
clear, sir.
Yeah, the time limit. However, the same is now reduced to 5 years from the end of assessment year for income escaping 50 lakhs. However, there is time till 31/8 for issuing notices by the tax authorities under 148A. So therefore, you see a lot of notices have been coming for those years, early years. Post 1/9/2024, any income which is not offered from 1/4/18 only can be reopened, provided it is more than 50 lakhs. TDS provisions. There have been a lot of important changes in TDS provisions. Of course, in section 192 regarding salary, now even though the rates have not changed, but now there is one advantage for the employees. If there is a TCS, tax collected at source, which is generally collected for while you purchase a luxury car, for example, you would have paid some tax collected at source. Or if you have sent money abroad to your son or somebody dependent, there would have been a TCS. Now, along with the TDS, this TCS can now be adjusted against your salary income. Plus, they have also made an amendment which says that only any loss or in respect of income from house property. In case of income from house property, there could be a loss because of the repayment of interest. You would have paid interest on the loans borrowed for purchase of a residential house. So such loans, the interest paid on such loans are deducted under section 22. So that is now eligible. You can claim it as a deduction while you if you inform your employer that so much money I have paid as a interest on house property, they have to take cognizance. Similarly, TDS and TCS can also be combined, and you can claim it as a deduction from your tax payable, because the TCS portion, it was not clear whether it can be reduced. So now it is very clear. Section 194 DA, they have for insurance policy, LIC policies, they have reduced the TDS from 5%. If you receive any money from the LIC on maturity, the TDS is reduced from 5 to 2%. 194F mutual fund repurchase, 20%, it has been omitted this year. 194G lottery tickets been reduced from 5 to 2%. Commission and brokerage has been reduced from 5 to 2%. 194 IB, rent by HUF for individuals, reduced from 5 to 2%. That's actually the reason for this reduction is the government felt that all these people may not have so much of income, and therefore there is all that refund amounts which were to be paid to all the people on filing of returns were very high. So they actually reduced on self-interest. The government has reduced these TDS rates. Okay. 194T partners remuneration has been added this year, 10%. Alignment of interest on delayed payment on TCS with TDS. Propose interest, increase the interest rate of simple interest from 1 to 1.5% on delayed payment of TCS after collection. So if you have collected tax at source, you are supposed to remit immediately within the next month. Now there is no, it was only 12% for delayed payment. Now they have made it 18%. This we already discussed. Partners remuneration, we already have spoke about it. Lot of changes have been made in TDS rates. Many times what is reported in Form 60 could vary with actuals. In respect of Section 198, foreign tax credit was claimed in assessee's return. Usually the tax amount paid was getting deduction without grossing up of income. So now that is not possible. So you have to, any foreign credit, tax credit, you have to gross up that income and then claim it as a deduction. There is a small change in declaring of the assessee in default, which has been reduced from 7 to 6 years. If any TDS is failed to be deducted on foreign remittance before 2018, no reopening can be done before 6 years. So this is a favorable amendment. Withholding of refund. If any refund is due to the assessee. Now this is a very important amendment because we used to get some interest on 244A. So now that has been, they have actually amended the provision. So if any refund is due to assessee, the tax authorities can withhold the refund, saying that there could be a demand based on reassessment. Earlier, two conditions were specified under Section 245. One was permission from Principal Chief Commissioner, and the other one was written documentation for justification. Now 30 days was allowed, which is being increased to 60 days. And interest under 244A is also not due, and it is enough if there is a written documentation for justification. Then this is very important amendment, application of Black Money Act. Every assessee having foreign assets or investment abroad had to disclose the same in the return of income in India. Failure to declare there was a penalty of 10 lakhs, which was automatic. A small window of rupees 5 lakhs in cash or bank need not be disclosed earlier. Many times SOP ESOPs were given to employees, which are not disclosed. Now they have made an upper limit of 20 lakhs, which has to be reported in Schedule FA in the return. Then such investments are not covered under black money. Number of issues like how to value such assets arise. In my view, the value should be disclosed on historical cost on the date of investment based on exchange rate existing then. Indexation effective date. Indexation goes away on 23/7, budget day for properties purchased after the said date. Long-term capital gains taxable from 23/7, reopening from 1/9. 1/10 is the effective date for TDS provisions. 1/4/25 for TDS on partnership salary. Most of the provisions are applicable for new regime, which is now a default regime. Now, if this old and new 115 BAC, there is that's the new regime. When you file a return, you can find out what is the tax liability in a new scheme and under the old scheme. Now, suppose you want to opt for the old scheme, you have to file a Form 10 IEA. Only then you will be allowed to file opt for the old scheme. But problem is, once you opt for the old scheme, only once in your lifetime you can change from old to new. That's the only problem. Now we have this Vivad Se Vishwas scheme, which was introduced in clause 88 to 99 of the budget, seeks to reduce the pendency of number of cases in various stages of appeal. Basically, what it talks about is if the assessee withdraws all appeals at various forums and agrees to pay the disputed tax and interest due before 31/12/24 or after 1/1/25, the extra payable increases from 10% of the disputed tax to 35%. You do that, you can come out without any problem. You can save further harassment, or you can save further procedures for filing appeal and all that, provided you withdraw everything from all your appeals. Should I go for indirect tax? What is your view? Because another 10-15 slides are there.
Maybe a brief overview, and then we can have some question answers if possible, sir.
No problem. But it's okay. We will just give a very fast overview. Okay. So indirect tax, actually, though the governance of indirect tax is with the GST Council. Mainly, indirect tax talks about the GST provisions. So you have the governance is only in the form of with the GST Council. So this is the 7th year since the act was introduced. It was introduced in 2017, 18. It has matured over the years. For financial year 2023-24, total collections under GST was a massive 20.14 lakh crores, 11.7% increase over. And I tell you, this indirect tax, this GST is the best example of how India has been able to use the digital platform most effectively. If you look at all the other countries, many of the countries, for so many assessees, this kind of complications, I don't think any other country has implemented this kind of GST. There has been a seamless, another problem is, or another from government point of view, there is a seamless sharing of information between Direct Taxes Department and GST Department. Today, your annual information statement provides a gist of turnover details filed in GSTR1, summary of purchases claimed by you as a deduction. And unlike the direct tax provisions, which comes into effect from the date of passing and the president's asset, GST provision can be implemented only if all the states give the assent. So whatever changes we are going to discuss here will be applicable only when all the states have accepted. Okay. Now, what are the important changes? You look at of course, we missed the customs. Some sector-specific custom duty proposal, and just one slide. Fully exempt, affordable medicines have become more affordable, especially 3 more cancer medicines are fully exempt. Mobile industry, they have reduced basic customs duty to 15% on mobile phone, mobile PCBA and charger. So your mobile phones may also become cheaper. Reduce custom duty on gold and silver to 6% and platinum to 6.4%. So there will be a emphasis, or maybe there could be some higher imports of gold and silver. So it will reduce your gold prices. Reduce BCD on shrimp and fish feed to 5%. Exempt more capital goods for manufacturing of solar cells and panels. So this is actually meant for supporting energy transition from thermal to solar. Fully exempt custom duty on 25 critical minerals. Maybe it's aimed at the EV industry, critical boost to storage strategic industries. Now, we start with the amendment of section 9(1). Now, so far we were planning to, there was a talk of introducing petrol in the GST regime. But instead of reducing or maybe adding petrol and diesel to the GST, they have now added one more item, which is denatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. So this has now moved from the central list to the state list. So it will now be attracted by VAT. New 11A section has been inserted, which is meant to empower government to regularize non-levy or short levy of central tax due to any general practice prevalent in the trade. See, for example, ice cream parlors, some parlors used to charge 5% for takeaways. Some parlors used to charge 18% for takeaways. Each one was following its own way. Government was saying it should be 18%. Now, if based on general trade practice, if many people are charging 5%, then government says it can recognize 5% as the correct rate. And therefore, that becomes the applicable GST rate. But again, this has to be proved and they have to introduce a notification. But if somebody has charged 18%, the government will not grant refund for difference in rate. Now, section 13 deals with the reverse charge mechanism. RCM is to be paid by, RCM is what? Where you have spent money on, say, transport, which you have hired a goods transport operator who is not a registered dealer under the GST. I mean, he's an unregistered dealer, but he brings the goods and he says the freight is should be taxed on RCM basis. So you have to now pay the tax on that on reverse charge mechanism basis. So what this means is the government collects tax from the recipient where it feels that the unregistered dealer is not organized and therefore it doesn't lose any revenue. This is coming from the service tax period. So the one advantage is when the recipient pays GST, say 18%, he has to issue a self-invoice and a payment voucher and then claim the same as an input credit. So he is entitled for a ITC. The amendment provides that the time of supply shall be 60 days from the date on which self-invoice is issued. So this is the amendment which has been done. Supplier registered solely for TDS purpose shall be considered as unregistered person for this section. Now, TDS generally deals with the government, any government sector. When you deal with the government, then you are the GST is based on TDS basis. Section 16.5 is proposed to be amended with retrospective effect. So, based on the recommendation of the 53rd GST Council. So, this has favorable impact on those dealers who have been served with demand notice for delayed credit of ITC, effective from 1/7/2017, which enables ITC to be availed based on return filed from, suppose the registration is cancelled and then you applied for revocation. Now, if the revocation, there is a gap between the date of cancellation and the date of revocation, then this amendment allows you to claim ITC after the revocation has happened. Then we come to section 17, amendment of section 17 and section 39. So suppose some tax has been paid based on mobile, some mobile squad has actually confiscated some goods which is under movement, and it has imposed a fine which is paid on DRC 03. The problem is that amount of fine or penalty which was paid cannot be claimed by the assessee or the dealer, and it was blocked under section 17. Now this amendment seeks to allow the payment of such tax to be claimed as an ITC, and it can be set off as input henceforth. Similarly, the TDS return filers under GST did not have there was no need to file a nil return, which means the government companies or government bodies which were utilizing services of any dealer had to deduct tax at source, but if there was no tax, it need not file a nil return. Now they have said it is mandatory for such bodies to file a nil return, even if there is no deduction. Revocation of cancellation of registration, amendment of section 30 and 54, and introduction of a new section 74A. So here GST registration, if cancelled, can be revoked subject to conditions which may be prescribed. So amendment of section 54, wherein no refund of unutilized ITC or IGST shall be allowed in case of zero rated supply of goods, where such goods are supplied subject to export duty. Then similarly, a new section 74A is introduced for determination of tax not paid or short paid or erroneously refunded or ITC wrongly utilized or availed pertaining to 2024-25 onwards. Notice under a new section can be issued up to 42 months from the due date of filing annual return. But if the amount is less than 1,000 rupees, no such notice will be issued. Time limit for issuing the order is 12 months, extendable by 6 months. 128A is a waiver scheme. Actually, any if there is any penalty or tax which is liable, where there has been a dispute, this can be this 128A waiver scheme can be applicable where the interest or penalty has already been, the tax has been paid, but it is not applicable for interest or penalty which has already been paid, and it applies only if there is a tax due. Whereas interest or penalty, if it's only interest or penalty due, then it may not be covered. Of course, I'm going very fast because of the time constraint. In case you have any questions, maybe at this point, I can still go on. We will stop at this point because it's already 7:36. Yes, sir. Any questions on what we have discussed so far? Was it very fast or?
Sir, good evening, sir.
Good evening.
I'm Dr.
Shekhar.
Shekhar, Group of Institutions. I have one all the students are very much excited about that 1 crore internship by Government of India, 1 crore students. And we want to know the modalities, what is the eligibility, and which companies will select, and who are all eligible. So we just want to know some light on this, sir. Can you throw some light on this?
No, that scheme is yet to be clarified. It is announced in the budget, but we have to wait for the full details.
Because our boys are so excited. I told them the Government of India is giving 5,000 rupees a month for 1 full year internship in top companies. They're all excited how to go about it.
No, I think there will be some criteria fixed, and also there will be some education levels also, skill levels which may be. It is meant for upskilling.
Yeah, yes, I think mostly it will be vocational, I guess, sir.
Vocational, I guess, yeah.
Yeah, because we are arts college, we are teaching commerce and management and computer science. Whether they're eligible because they're going for industry internship, they take people or just basic doubts are there.
Yeah, it is still to be. What will happen is it will be incentive. This subsidy will have to be claimed. One has to be registered under the scheme, and only for those registered people they will, decide on the internship and all. And it maybe stock exchanges. Employment exchanges or other bodies may get involved. I do not know. There could be some.
The selection will be a tough task, sir.
I do not know that. How the selection will happen.
Anyhow, but the last 1 hour, your PowerPoint presentation is excellent, and we could recollect what we had last month. Thank you, sir. Yes, sir. Thank you.
Mr. Ramji, I have one question now.
Yeah.
Do you think you spoke of various segments for which this budget was meant, but I don't see any segment which is really happy with this. So do you think the finance minister has not tried to please or tried to please and failed in her process to please people?
No,
So the
segment, if you,
segment is really very happy with whatever has come through.
no, if you look at they have said that middle class segment is the aim for this budget is supposed to be focusing on middle class. As you rightly said, some of the provisions middle class do not welcome. That is why this long-term capital gain, people started protesting. So they actually went back. But some schemes, many of these schemes, it may not affect the general public. That is a problem. But the partnership firms across the board, it will have an effect. There will be, instead of ease of doing business, it's going to complicate the doing of business, especially as a firm.
And the finance ministers from Tamil Nadu have a knack of not pleasing people and trying to be too intellectual in the process.
They not mention Tamil Nadu name, sir, in the budget. That is the problem.
In the earlier budgets, Tirukural used to be quoted. This time, no such.
Yeah, starting with Tirukural, ending with Tirukural. This time, no mention about Tamil Nadu. People are angry.
Correct. Any other questions?
Participants, any questions, please?
Now, after having talked about this budget, please give your opinion on the chat box. You feel the budget has really contributed to your benefit, or those of you who are assessees, has it made life easier or difficult? I would like to see some response in the chat box.
Sir, 2047, 55 trillion economy. Is it possible, sir? Even we will not reach 5 trillion economy as of now.
No, it is possible because the lot of this thing emphasis is given on those 9 priority areas. Once you do that, automatically there will be a balanced growth in all the sectors. That is a good scheme, actually.
Vikshit Bharat 2047 is a good scheme, but 55 trillion economy seems a big task.
No, if you look at our overall position in the world economic thing, we are almost at 4th place, 3rd or 4th place.
Yeah.
Which means other countries are doing so badly, whereas we are actually doing better. If you look at China also, which is now in the 2nd place, China, there is a minus growth. The growth is, in fact, it has declined drastically. They have themselves claimed that only 4.1% growth, whereas they had aimed at 7%. So it is and Europe, if you look at Europe economy, most of the economies are not able to grow or keep pace with the inflation and others. US also is in the same shape.
Sir, in 23 years, every 5 years should be doubled, sir. Then only we can reach 55 trillion economy. So much development should happen in this country, then you can think of it.
Yes, any other questions?
I think what is important for 2047 is continuity of policies. Suppose a new government comes and they change all these policies.
Very well said. Yeah.
So it all depends on the people who elect, sir. We get the government we elect. So I don't think middle class or anybody, they hardly go out. I mean, unfortunate, but how many of us middle class people actually go out to even vote, sir? We take a weekend off during election. So nobody actually will care for middle class, honestly. Why should they?
No, this 12.5% capital gain, we do not know how long it will stand. They have now increased from 10 to 12.5. Hopefully, if they are able to sustain the same rate over the next 4 or 5 years at least, then it will be good.
So actually, there are a lot of students who are eligible to vote from the age of 18. But I guess most of the educated students haven't even got their voter ID cards made. But we will all comment on social media about policies and governments. Unfortunately, that doesn't work.
Correct.
Yeah.
When the election comes on a holiday, The holiday, everybody goes on holiday mood, so they go to hill station, other places.
Exactly. So
Particularly Chennai, Bangalore, that was last time only 40% voting.
absolutely. So middle class talks a lot on social media, but does not do much about it. So actually, it will not figure on any party's priorities. Honestly, it should not. It should not. I mean, we don't deserve it because we don't
Exactly.
go out to vote, no? So
If it comes on Saturday or Monday, everybody in holiday mood.
yes.
So thank you,
Right.
sir, for nice, patient listening for all the.
Thank you, sir. So
Sir, it is coming from Mr. Ramji, a renowned chartered accountant of Coimbatore. So we're all delighted to have your expressions and your views. We really benefited out of this 1 hour program.
Yeah.
The entire budget. Thank you so much, sir.
thank you, sir. So I will, it's my honor to pose a vote of thanks. So one of the most awaited Monday musings, I must say, and it was, as expected, a master class, beautifully done, so simplified. In fact, a couple of my concepts got cleared during your presentation, sir. So thank you so much for it. I mean, you covered everything from, the history of budgeting and the global eco trends, how India, one is nice to know that, India is relatively better off, and the balance of payment slide was actually very revealing that even a country like USA is only 3 months of balance of payments foreign exchange. And India is about almost a year. So we are in a very, I would say as of now, a safe place. Future, we don't know. It all depends on how the public decides. And, the major changes you pointed out, sir, which is, what was earlier and what is the change, and how, in some examples that you gave, how it can impact, especially the long-term capital gains, both the options. So, I mean, I can only use the word term masterclass. It was a masterclass indeed. And I think if you properly recorded it, Sujita madam, I think we can share the link with all the institutes so that the students who have not been able to attend
Exactly,
can
sir.
actually go through the YouTube link of the recording.
Okay.
And I think we should do it because this is one of those sessions where, missing it out is the person's loss.
Exactly.
Exactly.
Right,
So
sir,
I think that's my recommendation. Thank you so much, Ramji sir.
Thank you.
Very
It was
lucidly
my
presented.
pleasure. Yeah.
And once again, thank you on behalf of Coimbatore Management Association. Although you are part and parcel of CMA. So thank you so much.
Thank you. Thank you.
Thank you so much, sir.
Bye.
Thank you, Ramji, sir. Yeah. Bye.
Thank you, Ramji. All the best. Thank you.
Thank you.